BIS Commodities, taking a look at the week. A few things before we get going. Let's see where we closed out on some of the major ag commodities for the week. We did see September corn close up 8 cents. December corn did close 10 cents higher in the week at $4.63. So we did see a weekly upturn in the corn charts for a change in the December contract. Soybeans closed up 65 cents on the week in the September contract, and we did close up 77 cents on the week in the November at $12.59. We did see November soybeans test the 1275 area or the 1270 area as well this week, which is the 200-day moving average. Could be an area of resistance on the charts. Certainly something to keep an eye on next week. Wheat closed 2 cents lower in the September contract at $6.31 for the week. Lowest weekly close, albeit 2 cents lower. We have also seen the lowest price in the September contract period. Taking a look at the livestock market, cattle was able to close $1.40 higher. The August contract at $123.90 this week. Lean hogs, October lean hogs closed $1.75 higher at $86.72. We did see the August contract expire this week up at the $100 range. The big event or newsworthy item this week in the grain markets was the monthly supply and demand report, and a few surprises on the report. Lower production estimates in corn was probably the biggest surprise. We were expecting lower production estimates in beans, but we did see about 217 million bushels less on the production side of corn at 13.76 billion bushels, and it came from the yield per acre. The estimate was we did see the yield per acre dropped 2 bushels an acre at 154.4, down from 156.5 last month. The trade was actually looking for a 2 bushel an acre increase in that. And initially at the release of the report, we seen the futures spike as some short covering took place, only to see the weakness come back the following day on Tuesday and make new lows in the December contract, as there was some questioning of the methodology used by NASS in acquiring that estimate per acre, yield estimate per acre, due to pod weights for beans and ear weights for corn. Because of the lateness of the crop, the USDA substituted a 5-year average with 3 below trendline yields. The bulls found this as an opportunity to add shorts, due to the fact that in their ideas we would see heavier ear weights in following reports. Also this week we also did see the release of prevent plant acres from the FSA office with the 3.4 million bushels for corn. That's not necessarily expected to be incorporated in any NASS balance sheets in upcoming reports, but it also did lend a little positive to the market as well. Taking a look at the beans, the trade was expecting a reduction in bean acres, and we did get it. 500,000 acres of beans were reduced in this report, and the trade was looking for a smaller yield per acre adjustment, and we got a bigger one and expected at 2 bushels per acre, dropping our yield to 42.6 bushels, down from 44.5 from last month. Subsequently, that balance sheet got significantly tighter for 2013-14 production, thus the rally this week of 77 cents in the November contract. Weather still is a major concern, even though acres and prevent plant acres are out there. A few bushels here or a few bushels less or more an acre will substantially make up for those acres. So weather is still being focused on. There are concerns with the dry August, that we are whacking the top ends of the corn with some tip back. Also, we're concerned about needing an August rain to help fill out this bean crop. So weather will continue to be watched. The European and the The American model did flip-flop this week a little bit, with the American model not looking for any significant moisture next week across the grain belt, where the European model is looking for some rains to cross Iowa, which is probably featured as the state in most dire need of some rain right now. Certainly something to keep an eye on Sunday night session into next week. Moving on to the livestock markets, cash cattle has been a light trade this week. 119 bids, 124 offers out there. Some late day cash has been traded around 124. We're hearing a little of that. That may have helped propel the cash market today. We were deep in the red earlier in the day on the news of the Zilmax production of Zilmax from their company was going to come to a halt, or the sales of it. We did see the cattle market sell off, only to come back and close higher on the day, and I think it was due to some better than expected cash trade yet to be determined. The futures contract, futures months do look supportive. We were able to break out a little bit to the upside this week, but not explosively so. The December cattle chart has hit the 50-day retracement from early month highs, beginning of the year highs, down to last month's lows. Futures are going to continue to reflect the cash market to some extent, but we are seeing futures still trade at a premium to cash. We did see the boxes push up $4 to $5 this week. The choice cutout closed at just shy at 194. The select at 186. So we are seeing a little bit of demand on the boxes. Taking a look at the futures, if we were to compare the deferred cattle futures compared to corn and feeder cattle futures, there is a huge margin opportunity out there, where the cost of corn and feeder cattle compared to what we can sell cattle for is showing an opportunity to lock in some very good margin. Again, this is futures only and not basis adjusted, but it's certainly something to take a look at. Hogs this week, we did see the August futures go off after being up close to $100. Will we see the same? Will we repeat the same pattern where we see the deferred month, which is trading $15 less, come back up to where the previous month went off? We have seen that the last couple expirations. Seasonally, you wouldn't expect a huge rally in hog futures. But the interesting thing is that we are seeing open interest at a premium, or more open interest in the hog contracts compared to beef. And that, from a historically standpoint, is one of the first times ever. So there is a lot of interest in hog futures. Certainly something to keep an eye on as we move forward. A few other items of interest is we are seeing the dollar down here at the bottom end of the charts, maybe showing a little bit of bottoming pattern in the charts, and we are seeing maybe a little topping action in the equities markets, as we did see a substantial break in the S&P this week. Certainly something to keep an eye on with the direction or the flow of money. If you have any questions about these or any other markets, please feel free to give us a call here at BIS Commodities at 1-800-373-2525, or check us out on the web at biscommodities.com.